There's two boys growing up in Stuttgart in the 1980s. Same street, same school, same modest two-bedroom apartment their families could barely afford. 40 years later, one of them owns his home outright, has a paid-off rental property, and a retirement account worth 1.2 million euros. The other is 61 years old, still renting, still working, and still wondering where 4 decades of a perfectly good salary actually went. Neither of them was rich. Neither of them inherited anything. Neither of them picked better stocks or got a lucky break. The difference wasn't opportunity. It was a set of habits so unglamorous, so quietly boring, that most people walk right past them without noticing they exist. Germany has one of the highest savings rates in the developed world, year after year, decade after decade, regardless of what the economy is doing. This isn't an accident, and it isn't about higher salaries. German median income is actually lower than American median income once you adjust for cost of living. The difference is structural. It's cultural, and almost none of it has made its way into the personal finance content most people consume. Today, 10 German money habits that quietly build real wealth, none of which require you to earn more than you currently do. Number 1. Sparbuch thinking, the savings book mentality. For generations, German children received a Sparbuch, a physical savings passbook, as one of their first financial tools. Every birthday, every bit of pocket money, every small gift got physically deposited and recorded in that book. The amounts were tiny. What mattered was the ritual. By age 10, a German child has often watched a number grow slowly and visibly for years before they've ever bought anything with a credit card. This creates a mental default that lasts a lifetime. Money's first job is to be saved, and spending is what happens to whatever's left over. Compare that to a financial childhood built entirely around earning allowance to immediately spend it. The starting software is completely different. Adults who grew up with Sparbuch thinking don't experience saving as a discipline they have to enforce. They experience spending without saving first as faintly uncomfortable, almost like leaving a door unlocked. Number 2. Anschaffung philosophy, the weight of an acquisition. German has a specific word, Anschaffung. Used for significant purchases, not I bought a couch, but I made an acquisition. The word itself carries formality and weight. It signals that this isn't a casual transaction. It's a deliberate decision that deserves consideration. Germans commonly research large purchases for weeks or months before buying. Not because they enjoy shopping, but because the cultural framing treats a major purchase as something you grow into deciding, not something you fall into. A washing machine, a car, a sofa, these get compared, debated, sometimes delayed an entire season to catch the right sale window. The American instinct treats most purchases as immediate. The German instinct treats them as planned events with their own timeline. That gap in patience alone prevents an enormous amount of impulse-driven financial damage. Number 3. The cash culture and envelope discipline. Despite living in one of the most technologically advanced economies on Earth, Germany remains remarkably cash-reliant. Many Germans still withdraw a set amount of cash weekly and use only that for discretionary spending. Once it's gone, spending stops until the next withdrawal. This isn't nostalgia. It's behavioral engineering. Physical cash creates a visceral feedback loop that a card or a tap simply doesn't. Handing over a banknote and watching your stack get thinner registers in a way that a number changing on a screen does not. Many Germans describe credit card spending as feeling like not real money, which is precisely why it's dangerous. The cash envelope isn't a budgeting gimmick imported from a finance book. It's simply how an entire culture has always operated, and the wealth-preserving side effect is almost incidental. Number 4. Schadenfreude-proof living, the discomfort of visible wealth. There's a strong cultural discomfort in Germany around visibly displaying wealth. Driving an ostentatious car, wearing conspicuous logos, or renovating a home far beyond the neighborhood standard draws quiet judgment rather than admiration. Wealthy Germans are often described as people you'd never guess have money, modest cars, unremarkable houses, plain clothing. This matters financially because status competition is one of the most expensive forces in any economy. When the social reward for visible spending disappears, the incentive to overspend disappears with it. Nobody is upgrading their car to impress neighbors who would judge them for it rather than admire them. Removing the audience for status spending removes a huge percentage of the spending itself. Number 5. Mietonung patience, the willingness to rent for decades. Roughly half of Germans rent their entire lives, and renting carries none of the social stigma it carries in many other countries. There's no cultural pressure to stop throwing money away on rent by buying as early as possible. German renters often have strong tenant protections, predictable rent increases, and long-term leases that create genuine stability without ownership. This matters because rushing into homeownership before you can comfortably afford it is one of the most common wealth-destroying decisions people make anywhere in the world. Germans who do buy tend to do it later, with larger down payments, after years of deliberate saving, not because they were forced to wait, but because the cultural pressure to rush simply isn't there. Patience that would feel like failure in another culture is simply normal life in Germany. Number 6. The apprenticeship mindset, earning while learning. Nearly half of German students enter a dual apprenticeship system instead of a traditional university track, earning a wage while training directly in a trade or business. They enter the workforce years earlier than university track peers, with little or no education debt and immediately employable skills. The financial head start this creates is enormous and rarely discussed. A young person earning and saving at 18, while their international peers are accumulating student debt, has a 5 to 10-year compounding advantage before some of those peers even graduate. The habit underneath this system isn't really about apprenticeships specifically. It's the broader cultural comfort with non-traditional paths to stability. Instead of treating one expensive path as the only respectable option. Number 7. Vorsicht budgeting, planning for the bad year before it happens. Vorsicht means caution, and it shows up financially as a default assumption that next year might be worse than this one. German households, and even German economic policy, tend to budget conservatively, build larger buffers, and avoid assuming that current good conditions will continue indefinitely. This shows up at the household level as maintaining emergency funds that would feel excessive by American standards. Sometimes 6 to 12 months of expenses, fully liquid, untouched. Treated almost as a fixed cost rather than a flexible goal. The psychological shift is subtle but powerful. Instead of asking, "Can I afford this if things stay good?" the question becomes, "Can I still afford this if things get worse?" That single reframed question quietly prevents an enormous number of financial overextensions. Number 8. Genossenschaft thinking, the cooperative instinct. Germany has one of the largest cooperative banking sectors in the world. Credit unions and cooperative banks, owned by their members rather than shareholders, hold a massive share of German retail banking. Members often get better savings rates, lower fees, and a structural alignment where the bank's success and the depositor's success move in the same direction, instead of the bank profiting from the depositor's overspending. The broader habit this reflects is choosing financial institutions and financial products based on alignment of interest, not just convenience or brand recognition. Many people in other countries never ask whether their bank profits when they struggle financially. Germans, through this cooperative tradition, have institutionalized the question. Number 9. The Resturlaub instinct, using what's already paid for. Resturlaub refers to remaining, unused vacation days, and there's a strong cultural norm in Germany around actually using your full allotted vacation time rather than letting it evaporate. This sounds unrelated to wealth, but it reflects a deeper principle, extracting full value from things you've already paid for, rather than leaving value on the table out of guilt, busyness, or misplaced productivity culture. That same instinct extends to insurance coverage, employer benefits, warranty claims, loyalty program value, and negotiated discounts, categories where enormous value quietly expires unused every year because using what you're entitled to is treated as either too much effort or somehow improper. The Risturlob instinct says the opposite. If you've already paid for it, extracting the value isn't excessive, it's simply not wasteful. Number 10. Generation Vertrag awareness, thinking one generation ahead. Germans grow up with a strong cultural awareness of the Generation Vertrag, the intergenerational contract underlying the pension system, the explicit understanding that today's workers fund today's retirees, and tomorrow's workers will fund them. This creates an unusually clear, almost matter-of-fact relationship with the idea that what you do financially echoes beyond your own lifetime. This shows up at the household level as a stronger default instinct toward modest, deliberate intergenerational transfer, teaching children the Sparbuch habit. Passing down repaired furniture instead of replacing it, treating financial education as a responsibility rather than an awkward conversation to avoid. Wealth, in this framing, isn't just something you accumulate for yourself. It's something you're quietly building a transferable habit set for, whether or not there's ever a large inheritance attached to it. None of these 10 habits require a six-figure income. None of them require investment sophistication or insider knowledge. What they require is something far simpler and far harder: a cultural default that treats patience, caution, and quiet living as normal, instead of treating them as sacrifices. The two boys from that Stuttgart apartment didn't diverge because one of them discovered a secret. They diverged because one of them kept operating on instincts that most of the developed world has spent the last 40 years training out of its citizens, and the other one didn't. You don't need to become German to build wealth this way. You just need to recognize that almost everything on this list is available to you right now, in whatever country you live in, completely free, starting today.